Welcome to the Alibaba stock analysis. Today we're going to be doing a deep dive into the company BABA. That's its ticker symbol. This is StockerFinance. I am your host, David Scheuer. Twitter.com/StockerFinance for more. Check out the links below if you'd like to support the channel. So anyways, since the coronavirus crash back in March, we've seen about a 30% increase in Alibaba shares. However, what you've noticed is that its 52-week high is significantly higher than that of the current price. That's because it hit that 52-week high, and then a lot of controversies happened. Number one, its CEO, Jack Ma, or founder, just completely disappeared out of nowhere. There's some altercations after he made some criticism towards the Chinese government. On top of that, after that happened, after his criticisms were made, the Chinese government then stepped in and did a probe into Alibaba. It was a monopoly probe. The United States has had a trade war with China going on with Donald Trump, and they recently even threatened to blacklist Alibaba from the United States, which means it would no longer be allowed on American exchanges, and investors would be forced to sell their shares, or they have to actually go to China, go to a Chinese exchange, and then purchase shares there if they want to be an owner of this company. Basically, it would not be good for shareholders of this company. Its market cap is currently $636.64 billion. If we compare that to Amazon, and I'm going to compare the financials quite a bit, you'll notice that it's worth less than half, or not less than half, just below half of what Amazon is worth. Amazon's worth about $1.5 trillion, Alibaba $636.6 billion, with a PE ratio of 31.3. Anyways, if we look at the 1 year, again, it's down about 25.81% since its 52-week high. And if we go ahead and look at today's chart here, it's recovered slightly, up about 4% today. Most likely going to be up a little more tomorrow with some good news. But as a long-term investor, we're not paying attention to the day-to-day price fluctuations. If we go ahead and compare this to Amazon stock, it's up 77% since the March low. There's a few days before on this comparison. The Google charts aren't completely identical. And again, its market cap is $1.59 trillion. Double that, a little more than double that of Alibaba's, with a PE ratio, however, of 92.71. We're going to expect Alibaba's PE ratio to be significantly less or slightly less of that of Amazon's, and that is simply because it's an ADR and not an American company, which means a lot of massive indexes, etc. It's not involved in those, it's not allowed in them, or they just simply don't include it, and so a lot of institutions that are forced to buy those indexes will not be purchasing shares of Alibaba. If we move on here, let's dive into the financials of this company. I'm using hypercharts.co. Definitely check out this company and this website. It's really cool. They do a great job with simplifying and making financial data really pretty to look at. If we look at the most recent quarters of the fiscal year 2021 from quarter two, if we go ahead and look, they did $22.838 billion in revenue. Core commerce, $19 billion. Cloud computing, $2.9 billion, which is a growing segment for them as they try to expand that. Digital and media entertainment, $1.18 billion. And other just $173 million, which could be a variety of different things there, probably companies it owns, etc. If we look at the operating expenses, a massive increase in operating expenses as of the last quarter. Quite unusual, but there's a lot of activity going on with this company right now, especially in this crazy world that we live in. There's been a lot of situations going on in China and the United States. It's no surprise there's an increase in operating expenses. We really see that across the board with most companies. $7.155 billion in operating expenses. Break that down a little more here, but here is actually Amazon's operating expenses. You can tell if you look at the difference in operating expenses, Amazon has significantly higher operating expenses even after Alibaba's massive increase in operating expenses for this specific quarter. And what we're going to notice as we go ahead and look at the margins soon, and we'll do that in a little bit here, Alibaba's margins and profit margins are significantly higher than that of Amazon's. If we look at revenue and operating income for Alibaba, holding steady at $22.83 in revenue, gross profit just below $10 billion, with operating income about $2 billion in operating income. Net income, $4.237 billion. If we compare that to Amazon, they did $6 billion, so Amazon does have slightly more net income, as we saw with its increase in revenue. But let's go ahead and look at Alibaba's profit margin. This is the big difference between Amazon and Alibaba. Alibaba's profit margins, let's go ahead and just look at Amazon's here. It has a 6.44% operating margin, and about the same for its profit margin. If we go ahead and look at Alibaba here, it's an 18.55% profit margin, significantly higher, more than double the profit margin that Amazon has. And maybe wondering why that is. Well, a lot of that just has to do with the manufacturers, which are located right in China, where Alibaba is located as well, cheaper labor, etc. Amazon's acting kind of as this middleman, where there's a lot of people taking products, pricing them up, and then selling them on Amazon, whereas Alibaba is just going directly to the manufacturer, selling it on their site, doing a lot of wholesale, so they can make a lot more profit from that. On top of that, Amazon really doesn't make that much profit from its e-commerce sales, unlike Alibaba. Amazon really makes most of its money from its Amazon Web Services. If you look into the company, you can see that that's the case. If you go ahead and look at revenue growth here, year over year, 37%, very similar to Amazon revenue growth of 37% as well. And that's most likely just an industry trend there. They both grew 37% year over year in revenue because the industry as a whole is continuing to grow as more people shop online throughout the world. If you look at total assets, they're steadily growing, which is a great sign for this company. 30% growth year over year, quarterly growth, with $211.15 billion in assets. We can see that right here. If we look at liabilities, they have $67 billion. And if we go ahead and look at the shareholders' equity, which is just taking the total assets, subtracting total liabilities, you get $143 billion and $335 million. And if we look at the outstanding shares, and the reason I'm showing you this is because we're going to do a little calculation. We're actually going to do a little net calculation here. This is they have about $2.745 billion in outstanding shares. And the net current asset per share, which what you do is you go ahead and you take, if we go ahead and go back here really quickly, you're going to go ahead and we're going to take the shareholders' equity, we're going to divide that by the shares outstanding, and we get $52.21 a share, significantly less than the price. This is not necessarily a net stock or a huge, I guess you could say almost a Benjamin Graham stock, since he was the one who really spearheaded this calculation in the investing world. But that's a really healthy amount. It's not significantly overvalued in any case right now, especially when you compare it to companies like Amazon or any company in the tech world right now. Now let's talk about China specifically. We went over the numbers. It looks good. Some little situations going on, but assets are growing. Shareholders' equity is increasing. Revenue is increasing year over year as well. Everything looks pretty healthy. Their margins significantly higher than Amazon. So they're on a good track so far. But one of the biggest parts for Alibaba from a bullish perspective is simply that China is a growing population and economy. Keep in mind that China's population is more than that of Europe's and North America's combined. If we go ahead and look at some statistics here, and this is just straight from Google, by the way, they provide so much data. You can see the GDP per capita compared to other countries, and it's definitely not up there with Germany or Japan yet, but it is increasing over time. If you look at market capitalization of domestic companies in China increasing over time, as well as GDP per capita in China, which has increased drastically in the past few years. So it won't be surprised if that GDP, and if you look at it compared to other countries as of 2019, if that starts to catch up and get on the same level of Japan, Germany, New Zealand, etc., and the United States. It's going to take a while for that to happen, but their population is so large and their economy is growing so quickly, as you can see by the GDP product per capita and just in China chart on the top right there, it's growing pretty rapidly, and I won't be surprised if they catch up. We look at the Gini index as well, and then what that is simply how do I explain it? Basically, what it is the comparison of income between rich and poor. So basically the wealth gap in that country. That's a simple way to explain it. You can look it up if you want to learn a little more about it. Basically, it has to do with income inequality. 0 would be there's a completely equal economy. 100, a completely imperfect economy, so very unequal. And you can tell that China is kind of right in the middle at that 30, so less than the middle, which is great. And it's declining as well, which is a great side to show that equality is, in terms of income and net worth, is increasing in China. If you look at it compared to other countries, it's actually better, it's actually slightly better than that of Malaysia. It's about slightly better than that of Russia as well, which is a great sign for China. And as it's going to decrease, it might get on the same level as Japan and Germany, etc., as it continues to work on that. If you look at population as well, population is skyrocketing, nearly 1.4 billion people in China. And if you go ahead and look at compared to other countries there, it's just insane how many people live in China. The growth rate has slowed, but it's not a concern necessarily. Their population's still growing. Urban and rural population. So the fact that the urban population is growing means there's more economic activity. People are moving closer together. The rural population is decreasing, which generally means less poverty as well. And the Gini index, I might be pronouncing that on Gini, whatever. That's part of the reason for that decreasing as well, which is a good sign. You can look at urban and rural populations compared to other countries. The population is just so massive in China. But the fact that the rural population is decreasing in China, I actually take that as a good thing for the overall economy of China. If we look at some more economics, so you can look at the labor participation rate. We kind of already looked at some of this, though. Let's go ahead and talk about what about the Chinese government versus Alibaba. This is a really big concern for most investors. Well, first off, the founder of Alibaba, Jack Ma, he's alive. So he did not die. They didn't kill him off, which is, it's crazy that we even talk about that, because here in the United States, something like that would never happen. But in China and in some of these other countries, something like that happening is not that rare. There's companies that literally will kill another CEO to, defend. They're basically literally going to war with each other. It's not just like competing on price. They're competing with weapons, assassinations. It's wild that that stuff is actually real. It just sounds like a movie, but it does happen. So it was a big worry that Jack Ma was dead, but he is alive, which is great. He's just kind of laying low right now. I believe this was simply a move, and if I'm taking the Chinese government's perspective as an authoritarian communist regime, if I'm taking their perspective, I think they wanted to make a statement. They wanted to make a statement that no one can challenge the Chinese government. Even if you're rich as powerful, founding one of these largest companies in the world like Jack Ma, he's definitely got a ton of wealth, ton of power. They're saying not even him can criticize the Chinese government without facing a punishment. So I think it was more of a statement. I think it was more of a bluff on their part to not give anyone else hope, I guess you could say, or give any other powerful people in China ideas and try to overthrow the government or something like that. Whatever, we could get into the political science of that later on. But I think China will allow Alibaba to continue on with its activities, the probes ending, etc., etc. Now, what about the United States versus China? This is another front for China that we have to talk about when it comes to Alibaba. If we go ahead, one of the great things that just happened literally an hour before me making this was Trump, their administration, scrapped the plan to ban Alibaba, Tencent, Baidu, etc. So the fact that they scrapped the plan to ban Alibaba is a great sign for China and the United States relationships, and a great sign for Alibaba. On top of that, let's talk about the Biden administration, which is going to be going into effect very soon once Biden gets sworn in about a week, or a little less than a week. He actually just picked someone who's going to be, there really wasn't much. Traditionally, or historically, the Obama administration, which Biden was the vice president of at that time, during that time, they were pretty soft on China. And people were kind of saying right now, China's getting a lot more powerful than they were right now. You need to take a stand against China. So he did announce that Kurt Campbell, which is going to be the White House coordinator for the Indo-Pacific region. Now let's talk about what this guy is doing and why this is important. Well, he is an early and important architect of a strategy to build up alliances and partnerships to keep Beijing in check as Chinese power grew. In the mid-1990s, he was appointed as the senior U.S. Defense Department official on Asia, arriving with relatively little regional expertise, but powerful strategic instincts. Within 2 years, he pushed a major expansion of the U.S.-Japanese alliance, arresting years of post-Cold War drift and settling in train the close defense cooperation between Washington and Tokyo today. As Assistant Secretary of State for East Asia and the Pacific under the then President Barack Obama, he championed the so-called pivot to Asia. Some were critical of a metaphor he suggested, or that suggested the United States no longer cared about Europe or the Middle East, while others argued that that policy was too provocative toward China. But the balance of power logic behind the pivot was sound and served as the precedent for a free and open Indo-Pacific concept. Campbell's pivot strategy remains the core point of consensus between the incoming team and congressional leaders of both parties here in the United States. Second, the new position is unprecedented in elevating Asia's strategic importance in the U.S. Policy apparatus. When I arrived at the National Security Council, the NSC, in 2001, the Europe Directorate was 3 times larger than that for Asia. When I left in 2005, they were about the same size, each headed by 1 senior director and about 5 directors. It looks as if Biden's new Asia shop at the White House could have 3 or 4 senior directors, making it the powerhouse within the NSC, likely 3 times the current size of the Europe Directorate. This kind of major reorganization always has some collateral impact, but if played well, it could also boost to transatlantic relations. NATO and much of the European Union are focused on working with the Biden administration on China, a strategic card that Trump team tossed away with its anti-European stance. So anyways, this is not necessarily a bad thing for Alibaba. If China relations can improve in any sense, which I think they drastically will under the Biden administration, that's going to benefit Alibaba significantly. So overall, I actually think Alibaba, with this current news, with it not being blacklisted, with the Biden administration coming into power soon, with their founder not actually being dead, I think that was simply a statement by the Chinese government. I think there's a lot of good news And personally, I'm very bullish on this company. Now, I'm not giving a recommendation to buy the stock or anything like that, but personally, I do think Alibaba remains undervalued, especially when you compare it to the financials of Amazon, especially as the company keeps building itself up, as the Chinese economy booms, etc. Anyways, guys, thanks for watching. I hope you enjoyed this analysis. Please subscribe to my channel. Check out these videos as well, twitter.com/StockerFinance. I'll see you guys in the next video. Peace out.